This is the June 20 edition of Commodity Week.
Todd Gleason services are made available to WILL by University of Illinois Extension.
Welcome to Commodity Week. I am Todd Gleason. Our panelists for the day include Sherman Newlin at Risk Management Commodities out of Hudsonville, Illinois, Naomi Blohm from TotalFarmMarketing.com in West Bend, Wisconsin, and Jim McCormick joins us from AgMarket.net out of Barrington, Illinois. Commodity Week is a production of Illinois Public Media. It is public radio for the farming world. Sherman Newlin now joins us. He is with Risk Management Commodities. He's out of Hudsonville, Illinois. He's not too far from Terre Haute, Indiana, but he's on, of course, the Illinois side. That gives you a better idea of where he is really in the state. Thank you for being with us. I know here in Champaign County, Illinois, University of Illinois, in east central part of the state, that while we had a lot of rain to begin with and it was tough getting the crop in, that things have gotten tight all the way, I think, through the central part of the state in the last 3 weeks. There has been rainfall, but not a lot, and my intuition tells me that you've not received as much as we had, although we had a dew on the ground on Thursday morning.
Yeah, that's exactly right, Todd. We struggled to get everything planted. I mean, it took us from start to finish like 6 weeks because we kept getting rained out. We had a lot of rain, and after we got started planting at the end of April and throughout May, but we did finish, around the 20th or something of May. But I, like we were talking about earlier, I had probably the best looking corn crop I've had in years to start with. But then the rain shut off, and now it hasn't rained the whole month of June, and we've been in 90 plus degree temperatures, and some of our soil is kind of sandy or thinner type, whiter type dirt, and that stuff's really starting to hurt, rolling up quite a bit with these temperatures. On top of that, it's going to start tasseling here pretty soon, so we have to, hopefully we can get some rain through here to help with that situation. But we've we've really went from looking great to looking, oh no, this isn't going to be good if it keeps this up type of situation. It's one of those where every day you look at several weather reports just to hope for an inkling that maybe something has changed in the forecast that's going to bring us some good moisture, something that'll really help, like what they've been getting up in the northwest corn belt. That some of that rain sure would be nice to have down here.
Yeah, it's been a bit since I've checked in with the agronomist on this particular fact, but it used to be that as long as it's below 93 degrees, going through Nick probably would be fine, that you could manage that, although without the moisture it gets tougher. However, 93 and above, then we have more of an issue as it's related to corn and its pollination. So we'll see how that goes, and certainly this week we've had in those low 90s and sneaking into the upper 90s in the next few days.
Mm-hmm.
And who knows what we have coming up. So we'll have to watch that really closely. The conundrum that farmers who are in these dry areas or drier areas that are mostly east of the Mississippi River now have is the conundrum that farmers west of the Mississippi deal with more often than not, which is that, hey, well, I have a crop that I am really unsure about. There is a crop out there in the United States, at least still to date, that looks not too terribly bad, and you have to make marketing decisions, especially if you haven't already. And that has to be a really difficult issue for you and others. And when you talk to producers across the whole of the Midwest, I suppose.
It is. I mean, like you said, we're kind of in between a rock and a hard place in our area here at the moment, on some of the crop for sure, because we don't get the rain, so you're not sure what your yield's going to be. But at the same time, you see the markets go down almost every day, it seems like. So yeah, it's tough. And you're right. I mean, there is a crop out there. Crop ratings are pretty high, definitely higher than what we were last year, and we still had a really good sized crop. So to what do farmers do about it? I think some are still sitting on old crop corn, so they need to deal with that as well. You know what I mean? Uh,
Yeah.
so that's a double whammy there. As far as old crop goes, I think you just got to sell it and be done with it. And new crop, depending on where your situation is, I mean, I hate to say it, but if you haven't done anything, you got to look at some put spreads or do something like that, to leave your upside open till you have a better idea of what your yield is going to be. Um, but at the same time, the market sees the rain on the radar. They see the rain on the radar, in Iowa, and they think, rain makes grain. So we continue to leak this thing lower. So that's about the only thing you can really do, in my opinion. But I mean, we do have the report here at the end of the month. Where are acres going to be? Are PP acres going to be up a little bit? Maybe that's possible. I know there's some very late planted stuff around, especially in our area. That stuff's not going to yield near as well, and so we have all that to deal with coming up. So we might get some sort of surprise. The National Weather Service, I think, came out this morning, and their forecast, Todd, looks to be very hot and probably on the dry side for a bulk of the Midwest coming into July. So I think there's, potentials for the market to rally, but it's not going to, unless this weather forecast really changes, it's not going to, run away to 5.50 or $6 corn anytime soon. So, you got to be aware of that. And you got to try and sell some rallies when and if they come. It would definitely help if this wheat market would quit going down every day.
It has not.
No,
And it's a good wheat crop in the United States.
it is.
And I suppose, what are the accounts we're hearing out of the Black Sea? I mean, I see differing accounts as to how much of it is moving and how much damage was done, particularly by the frost as opposed to drought. Do we have a feel for what the size of that crop is and what it means?
It is smaller, but I mean, here the last few days, it seemed like they've been starting to harvest, and you're getting some reports coming back that, well, maybe it's not as bad as we thought it was going to be, but they've also probably, not sure if they're in some of the worst part of it yet either. So, again, I think our crop here is really big in a lot of areas. It's been a good year for wheat. So we got the harvest pressure, and it doesn't do us any good if it's bad overseas if we don't see any export business, right? I mean, we got to see some business come our way to really pump the market up some more, and we're not really seeing that. So here we are. Wheat's the leader, but it's been leading us to the downside, right? Here lately. If it would find a low, put in some sort of post-harvest low, I think that would help until we see more of what this corn crop and soybean crop is going to look like.
Could just be soft red winter wheat pouring into the elevators and being hedged off as farmers sell it across the scale, which is
Correct.
generally what happens. Might be harvest pressure. We'll find out as we
Right.
go
Yeah.
through time. What's your soybean crop look like in the area?
All over the place. I mean, it looks a little tough to me. Not as good as it has in years past. Not the best stands because we had so much rain. When we were trying to plant beans in April and first part of May, and we just kept getting, either trying to plant it too wet or getting a lot of rain on it. Or guys just waited and they're really small. Some guys are even in this county just finished planting soybeans, so because they've been rained out for so long. So I think it's all over the board. I mean, the potential is still definitely there. Beans um, are made in August, so that August weather will be very important on that. Again, we got to see where the acres are going to be. I mean, it wouldn't surprise me if corn acres are down at this end of June report or a little bit, and bean acres be up a little bit.
It'd be interesting to watch that. Soybeans as a crop are just far more forgiving, I suppose, than corn is. Particularly through the corn has the pollination period and issues related to it. Soybeans just tend to bloom and stay blooming, and they'll go dormant for a while and look not great, and then suddenly you've got a crop. So we'll see how the August and early September rains go and what the rest of the summer looks like. However, if we look back at what the meteorologists were telling us in the wintertime, they said, we think hot and stormy, and then depending on what happens, we'll dry out either late summer or early fall, one of the two. But that was a forecast ages ago. So, and forecast ages ago are as good as the age of the forecast, I think. So, we'll have to see how all that goes. Time on soybeans then to commit to making sales as well, I suppose, or not?
I don't know if anybody's made a lot of sales. I mean, we made some sales when it was up above, new crop beans were up above $12. We made a few, but I don't think anybody's got enough sold as far as that goes. I mean, the downside is definitely could be a lot lower, but we're kind of running into some support. I mean, I think we've got a low of 11.16 and a half or something, and that's held so far today, and that was back in May from last year, I believe. So that it's important for that low to hold. I don't really know if we really need to take that out at this point in time till we get a little bit farther down the road and do see what our acres are and do see what the weather looks like. But we haven't been exporting the beans. Our export market is not great. China hasn't even bought any new crop beans yet, and that's pretty rare. And that's a concern. That is a concern that South America has really taken over all our business from China, and our relations with China aren't good, right? Nothing's good on that front, so they don't want to buy any more beans from us than they have to. So our export market could look a little bit iffy going on down the road. So that is a concern. So again, I mean, if you haven't done anything, I mean, basis isn't great, so you're selling under $11 now for new crop beans. I mean, you can always look at selling the board or buying some put options and doing some put spreads. I know it's hard to get excited about that from after we've dropped $1, but the downside is still there. But I'm willing to really kind of hold out and just kind of see what this weather is going to bring us before I get overly carried away.
Sherman Newlin, of course, is with Risk Management Commodities. He's out of Hudsonville, Illinois. Now let's turn our attention to the other two panelists with us, Naomi Blohm and Jim McCormick. Thank you for waiting. Naomi, let's start with you there at Total Farm Marketing in West Bend, Wisconsin. You're just to the north of Milwaukee. What's the weather been like in your area?
Well, we just got through, of course, that hot, humid patch, but yesterday and last night we have been inundated with rain and heavy rain, receiving well over an inch, and we have had steady, constant rain of a half inch to an inch, I think, for the past 3 weeks. So we are now too wet where I live on the eastern side of the state and really could use things to dry down and dry out and almost, in a sense, get that heat back to push our crops along, because we had a slower start to our spring. We've been soggy now all spring, and we could actually, ironically, use a few more days of high temperatures and heat.
And then, Jim McCormick, you are an hour and a half to the south of her in the Chicago area. Barrington is the suburb for agmarket.net's office space. What's the weather been like for you?
Actually, we've been pretty good. I mean, we did not get the heavy rain that West Bend got. That rain, that heat dome's kind of pushed it north. We've had some scattered stuff pop up. There's some stuff actually on the radar as we record this now. We've got some more rain coming this weekend. So overall, I would say, Todd, we actually look pretty good for the most part. I think my clients, a little further south and east you go, they're definitely a little bit more worried because they've gone several weeks without any rain. But Northern Illinois here, looking okay. If you go west of here, west of 39, they've got some scattered rains, and they're a little bit too much. You can shut off the rain here. So it's definitely a tale of either you got too much or not enough, it seems like.
So it's interesting to think about the variation from West Bend to Hudsonville, all kind of in a straight north-south line where the division does take place. We have rainfall, maybe too much, and crops looking good, and then things begin to dry out the further south you go and get hot, and I think they've been hot everywhere. but they've been dry for a while in some of the more southern areas, and farmers are worried. It's kind of the haves and the have-nots, particularly for parts of Illinois, Indiana, and Ohio. Do we know anything new about the weather forecast, Naomi, that suggests those places might be in better shape in the next 2 weeks? And does it make a difference, really, at this point, to a marketplace that I guess is trading a weather market, but the weather's been good, not bad, I suppose, or at least that's the way it looks when you look at the numbers from the trade this week or last week as well.
Right, and NOAA this morning came out with their updated 1-month forecast and 3-month forecast, and they are putting heat in extensively throughout the Midwest with more of a mixed chance of rain and drier for some portions of the Midwest. Initially, when the trade saw that this morning, the market actually elevated a little bit. We came off early lows, but we just could not grasp onto that forecast because it seemed like even though this maybe hotter temperature is coming, which is welcomed in some places, or maybe some places drying out from all of this recent rain, which could be welcome, we are viewing traders with the mentality that they saw that the crop ratings on Monday at 72%, the best since 2018, they're just assuming it's a record crop. It's like they don't understand that, too much rain is not great, or, too much heat later on in July without rain to go with it is not okay either. So the forecast and the weather still matter, but however, in the short term, it just feels like we have a little bit of fun selling and technical selling taking over the marketplace.
Does this mean that the Monday afternoon release of the USDA weekly crop progress reports are going to be fairly important for the whole of the week's trade each week going maybe for the next 3 to 4 weeks or maybe longer, do you think, Jim McCormick?
I think they will definitely use this as a gauge. I mean, lots of times, when you're done with it at the end of the year, the ratings don't necessarily correlate to the yield, but it's something we're going to watch. The one thing I want to point out about the weather specifically, there's two major models that we like to watch, the GFS and the European model. When we came in today, the GFS model was way wetter than the European model. The European models got some light rain in the east, but not near as much. And then the midday model run, we get that during the trading hours for the GFS. That put even more rain into the Midwest and given a better shot at rain for the Eastern Corn Belt over the next 10 days. But Todd, where we got to be very interesting is whether this European model, if it is correct, because it cools us down, but it does not have near the moisture in the atmosphere that the GFS does. And it's saying the big rains that the one model is projecting that I think the trade's leaning on, the GFS, is completely wrong. So we could come out of this weekend and realize, wait, that rain we thought that was going to materialize just does not happen, because the fact is when you go out 5 to 10 days, these maps are very, very erratic, especially this time of year.
Okay, so I want to deal with old crop corn again for just a second. We will have, and maybe you'll talk about this as well, on Friday of next week, not only the June acreage report, but of course the grain stocks figures. That will include all of the old crop corn that's still in storage, both on and off farm. On farm is very difficult to track, and USDA may have some difficulties with that. However, as we were talking with Sherman Newlin earlier, he said it was probably just time, he thought, for producers to go ahead and market out what they have left. Interestingly enough, I think, Naomi, was it 2-3 weeks ago? I don't remember when you were on this show last. You made a comment where I asked, and you said, oh, they have about 3 days to finish that out. So what I want to know is if anything has changed in those areas. And Naomi, I'll let you start. And what producers really should consider at this point with old crop that's still in the bin and at some point will need to be moved.
Yeah, I would say we're at the point of no return, and I'm a little bit more negative towards things in general, just again because this perception of larger carryout for another year is hanging over us. So I would say this, though, if you're a producer and you're doing your final price or roll because all the July contracts, first notice day is next week, Friday, you've got to decide if you're going to price or roll. And I would say price it. I think most of you are absolutely savvy enough to know that if July weather becomes an issue, you can take part with reownership with a call option strategy. But from a technical perspective, there is this lingering head and shoulders formation on the corn charts. And if it comes to fruition, the downside points to another 40 cents lower with futures. Now, if we can get some weather news to turn this market around, wonderful. Then we'll probably see the market have a 20 to 25 cent bounce from here. But if the weather forecast stays mostly favorable, or if the USDA doesn't give us anything friendly next week on Friday, it's really going to be tough for the market to make some traction to the upside. So my bias would be make the sale, and then if you wanted to, again, look at some kind of a reownership strategy to get through summer, you can look at some September call options just in case Mother Nature has something dry and hot forecast for us as a market surprise for the month of July.
I pretty much agree with everything Naomi said. I think she said it very, very well. The only thing I was going to tell you, Todd, is you got to be a little bit worried about what's actually out there unsold. We had one estimate, some of our commercials were telling us that as much as 23% of this old crop corn is still in the farmer's hand unpriced, and roughly 19% of the beans, according to one of their surveys. And I tell you what, if you're one of those producers out there that have grain unpriced, I think you got to get very aggressive. Remember, we're going to have about a $2 billion carryout of corn. You do not want to be that guy left over as we get to the latter part of the marketing year and the end users don't need it. We had one of our guys who work with the JSA was saying that one of their operators down in Missouri, Todd, that they figure they'll start harvesting down there by mid-September, and they only need 30 more days worth of corn to be covered to get into that new crop harvest. So, you know, you don't want to be the last one selling it. I think you got to just get it moved. This report tends to be a very volatile reaction. If you want to reown it, use options.
As you look forward, is there a different strategy for soybeans in new crop, that is, than there is for new crop corn? So, and I guess I'm thinking, Jim, that I want to hear about both of those strategies from you first.
I'm a little bit more worried about the new crop beans than I am the corn, just in the pricing risk. China's yet to buy a new crop bean, and I think that is a major concern. Your carryout is projected for new crop at roughly 450 million. To get there, they raised demand 125 million year on year on exports to keep that carryout from ballooning over 500. Right now, that looks just unrealistic as can be. That carryout could easily push over 500 plus. That tells me beans, even after this kind of just very depressing slide down to the low 11s, I think you got another $1 to go, if not more, with anywhere close to trendline yields. So I think you got to get some protection under it. And if you haven't sold or have protection, I'd definitely encourage you to get some in front of next week's report. Our group thinks there's a real live risk that you could see an increase in both corn and bean acres. And you start increasing corn acres, you come close to trendline yield for corn, it's the same story. We think corn could easily, with the stock's use historically where it's at, would suggest corn below $4. So we think even though the prices are down, there's still a lot of downward risk without a major weather problem.
My thought on the acreage report, I'm thinking of clients who sell seed and who have said that there was corn that was returned, soybeans that were planted instead. And then I also think of clients in parts of Iowa who have had to replant corn 3 times just because of the recent rains that had come through and just really making it tricky for things. So I don't know what this report is going to say, but I can't imagine it being over the top bullish to justify any producer to think, I'm going to wait for this report because it's going to give me $5 corn. I don't think we're going to see that. So my bigger thought too, though, goes towards the quarterly stocks aspect of it. I'm wondering if we maybe get something a little bit on the friendlier side there for corn from the standpoint of demand being a little stronger in some regards. But again, it's not enough to justify prices to have a price recovery rally up to the $5 area. A question for both of you, which actually I was wondering today, and I don't know what the answer is this report going to have data with it on any prevent plant acres, or are they going to somehow just come up with the planted acre number and then we get a harvested number off there as well? And I can't recall, so I'm wondering if either of the two of you remember that.
I believe it's just a planted acre. It's a survey of what the farmer intends to plant. He may not even get it planted. It's just, what did you intend to do? That's
survey.
it. That's
okay.
why. That's what makes me nervous. We can get it. That's why we think we could see more acres come up, because we lost some acres on the March report. You had, I think, 4.6 million corn, beans, sorghum, and wheat kind of disappear. I think the intention will show up, hey, I intended to plant it, but then what we're going to find out down the line is, no, we didn't plant it, or we lost it in Iowa, Minnesota, prevent plant. That number is going to get built in, but we won't get those to later in the summer. So
Right.
Jim's correct. It is a survey of planting intentions as of June 1st. However, if they expected to do prevent plant, of course, it's built into the figures. Looking forward to next month. July 4th is coming up, another holiday. I haven't checked. These can be interesting as the markets are closed. What day is July 4th this time?
It's on a Thursday. So we won't trade Wednesday night. We won't trade Thursday or Thursday night, but we will trade on Friday.
And whatever the weather forecast is coming into Friday morning is what we trade. And if there was any rain over the radar over Wednesday night or Thursday, the market is going to say good enough, and prices work sour and just go lower. So I think Jim and I are kind of in unison on our point here. You know, farmers that I've been talking to say, yeah, but what about planted acres? Yeah, but what about this weather forecast? And the thing is that, you know, you're waiting and hoping for something potentially bad to happen, or you're waiting and hoping for a piece of news from the USDA that is not going to be on that report next week with the prevent plant acres. So we're really encouraging you to be proactive, because for prices to really turn around and do an about face and go higher is going to have to be an act of Mother Nature to make that happen.
What are the fundamentals on the global marketplace, Jim McCormick, that you're keeping track of at this point? For instance, we still have second crop corn in South America that will come into the marketplace. We have their soybean exports, and we have the taxes there that have played a role in the market as well, and maybe could continue to do for at least 3, 4, 5 months, I would suppose.
Well, I think you've got to watch it, but I think the biggest thing we're seeing, Todd, really is the lack of demand. I mean, the currencies have dropped down in Brazil and Argentina. It's keep us competitive. China bought a few boatloads from us here and there, but right now we're hearing more demands being pushed right back to them for July and August delivery. You know, when you look at the wheat market, Russia wheat crop has dropped. Some people are ringing it back up, but right now there's reports that both Ukraine and Europe, they're driving their prices down to try to undercut the Russian wheat prices. But in a really broad spectrum right now, I think the biggest problem at this point is we're not getting a lot of those sales. So if you're a producer out there, you got old crop, new crop. I mean, it could be the worst case. You know, if you're not getting demand, prices go down to try to find demand. If you don't have a weather problem and the yield's there, then you're just going to exacerbate the problem. And, you know, what we've been looking at the last couple of years, this all year, is kind of, we've been following a scenario just coming out of the drought year in 2012. We had a big spike, pricings up. 2013 was a transition year. 2014 was a bear year. We've been watching this year do the same thing, with 2 years going up on the war in the Ukraine, last year being the transition year, and this year being the bear year. And the reason why I want to point that out, Todd, is if you look at like the D14 corn chart, it topped out around a little over $5 in May, right about the May WASD, just like this year. It slid into June, had a slight dead cat bounce, very slight, maybe 10 cents, and then it slid all the way into August, consolidated down to October. And my fear is everyone waits for that summer rally. The viewpoint of the brain is, oh, we have to have that summer rally. It does not have to rally. If the supply is there and the demand is not, the market is just going to be brutal. And I know a lot of clients say, well, we can't go that low. It's below my cost of production. The market just doesn't care. And it could really be devastating with anywhere close to trendline yields. So I think, you know, getting aggressive marketing, it's just something we can't afford not to do. The last couple of years, prices were so high, if you missed it, you still had an opportunity to break even. This year, if you continue to miss marking the grain, it could really be devastating to your bottom line.
Naomi, fundamentals that you're watching.
Well, absolutely. That perception of a carryout continues to be large. The one when you look at global soybean carryout, it's growing. When you look at U.S. soybean carryout, it's growing. When you look at U.S. corn carryout, stabilizing at 2 billion bushels, and global corn carryout is kind of waving in a sideways pattern for the moment, waiting to find out for sure where that Brazil safrinha crop is and how our U.S. weather is going to be. But right now, the perception is that supply is good enough. And let me build on what Jim said, looking at that December 2014 corn chart, $5, yes, peak in May, and then it went all the way lower. I'm looking at the chart right now, it's in front of me, to $3.18 by October 1st. Okay, so nearly a $2 loss. I remember those conversations too. It's below my cost of production. What am I supposed to do now? So we're still at a point, 460 December corn, and I hate to be that Debbie Downer, but there is a head and shoulders formation on the chart that points to 420, and it'll do probably a quick skid down to the $4 area. So be aware of that if the perception continues to be large global supplies, and if there is no weather issue this summer, things could slide lower for prices. So just be ready.
Let's get a final word from both of you now. Jim McCormick, I'll start with you from agmarket.net in Barrington, Illinois.
The final word, Todd, is that the volatility could really ramp up here the next 2 weeks. I view, like we've been saying, unfortunately, the bias is very bearish. Get your orders working. If you want to sell it in the futures market, you want to use options, you want to sell it in the cash market, get the orders working. I do think we might get a lucky shot of a rally, potentially on that report. You never know. It's the end of the month. It's the end of the quarter coming up. But have that decision being made, because right now it's such an emotional time. I think you just get the orders working, be prepared, to defend it down the line if you have that seller's remorse. But right now, I think the key is that maybe you rather sell a little bit early this year than sell late when it's all said and done.
And Naomi Blohm from Total Farm Marketing in West Bend, Wisconsin.
My biggest thought to producers is just don't bury your head in the sand, because that's what's happened for the past 3 weeks. Okay, take a deep breath and start to call your advisor. And if you're needing to be refreshed on how buying a put option works, or some of the advanced option strategies, how they work, that is what we're here for. I know that Jim has a wealth of knowledge in explaining that to producers. I love to explain to producers how it can work, what type of potential risk-reward situation you could have from a strategy, trying to correlate that also with what it can do for your cash markets and focusing on cash sales. So there is still time. Don't feel like you've missed the boat, where we still are at least sailing a ship that is not fully sinking yet. So we still have time. We still have some opportunity in front of us, but don't delay. Really make sure you're calling your advisors tomorrow and remember how to do things and brush off all of those old skills.
Commodity Week is a production of Illinois Public Media. You may listen to the whole of the program anytime you'd like at willag.org. That's willag.org. Our thanks go to our panelists this week, including Naomi Blohm. She is in West Bend, Wisconsin, at totalfarmmarketing.com. From agmarket.net out of Barrington, Illinois, we were joined by Jim McCormick, and we started our program by having a discussion with Sherman Newlin, a farmer and broker who lives in Hudsonville, Illinois, and works with risk management commodities. I'm Illinois Extension's Todd Gleason.